What's going on, guys? Welcome back to another video. In this video, I've got another pretty cool AMC update to bring all of you this afternoon. So what we're going to be taking a look at in this update is we're going to be, as always, taking a look at that Ortex short interest and utilization data, the most up-to-date data and accurate data that we have access to at the current time in order to get an understanding of where we're at in terms of the short squeeze side of this investment. Now, there is also something very interesting that I have noticed going on with this Ortex data. Now, this also has to do with the rise in institutional ownership that we've seen in AMC over the last couple of months. And I've heard you guys in the comment sections of a lot of my videos on Twitter, in DMs, that when we talk about the increases in institutional ownership, a lot of people bring up the fact that, well, if these institutions are buying, they could just be loaning out these shares to other institutions to create short positions and use those shares against us by flooding the market with supply. Now, we're going to go over exactly if that is happening at the current time and when we could have potentially seen it happen in the past according to the data that we actually have. But I know what you guys are thinking. If the institutions are loaning out shares, it's all doom and gloom. They're buying shares, loaning them out, collecting the borrow fee rate, and we're just here stuck in the middle. Not necessarily. With what we're seeing right now, we could potentially have something very good happening for us over the next couple of weeks or months that I really want to make clear to you guys as well. So the fact that we're going to talk about institutions loaning out shares does not mean anything really bearish at the current time for AMC. Now, the second thing that we're going to need to go over is this potential payment for order flow ban block that was brought by Senator Toomey. Now, we're going to go over this situation, exactly what his points are, and what we can do as the ape community to really put an end to a lot of this corruption, this manipulation that we are seeing happen in our government bodies, and we have the power to do it because of the vast size of our community. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And the more people that we have staying up to date on accurate AMC information, the stronger our community becomes. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So at the current time that I'm recording, AMC is slightly green on the day, trading at about $35.01. As we can see right here, I'm not sure why it's not reflecting up here, but we are up about 0.8% on the day. Now, when we come over to the Ortex data and we look at the utilization right now, 87.54, again, not really enough to put the pressure on these institutions. The short interest right around 17%, still relatively high, but again, we've seen it higher, we've seen it a little bit lower. It's basically just consolidating. Now, the first thing that I really want to get into, just so we can set the stage in terms of what we're looking at when we think about the institutions loaning out shares, is the institutional purchases that we've seen this year so far. So in the first quarter of 2021, we saw $370 million worth of AMC that was bought and only $13 million sold. So again, very bullish when we're seeing the institutional inflow massively outweigh the outflow. And in Q2, this is going to be the most important piece. We saw about $1.2 billion worth of AMC come in and only 409 million sold. Now, when we come back over to the Ortex data and we look at this red line here, which is going to be shares on loan, and then this yellow line right here is going to represent the utilization, we saw that right before the very significant run-up, we saw a very high amount of shares on loan, and the utilization was very high as well. Then we saw some shorts covering, and as expected, as the shorts get covered and we take a look at what exactly utilization is, the amount of shares that institutions are willing to lend versus the amount that have already gone out on loan, we would expect the utilization to fall. But when I mentioned shorts covering, again, guys, remember the shorts have not covered in any meaningful fashion, so I don't really want any FUD to get spread by that statement. But when the stocks do run up that significantly, there are going to be smaller short positions that do get covered. Now, here's where we start to see the divergence. Now, we know that in Q2, which is in this time frame right here, is when the institutions were buying a significant portion of their AMC, that $1.2 billion number. Then we start to see the short interest start to come back up, and we would expect to see that same thing with the utilization, which is exactly what we've seen. But then we started to see a little bit of a divergence. We saw the utilization start to fall and the short interest hovering around those same levels, or the shares on loan hovering around those same levels, but the utilization was dropping. Now, it doesn't make a whole lot of sense as to why these institutions would want to loan out these shares. The cost to borrow rates were not that high, but they were still higher than a lot of other stocks out there on the market. But when we're taking a look at what's happened here, and right now with the shares on loan data, when we take a look at the amount of shares on loan right now, 105.96 million, and we take a look at what the utilization is, 87.54, that means that right now there is about 121 million shares that institutions are willing to lend in total. So there are an additional 15 million shares there that are basically waiting to get sent out on loan. Now, it doesn't necessarily mean that these institutions are going to lend them out. It just means that they can lend them out and they are willing to lend them out at a given time. It doesn't mean they've actually gone out on loan, but it does suggest, according to the data right here, that there was an increase in share lending in July and August. But here is the silver lining to this that I want you guys to understand. We are starting to see the utilization pick back up a little bit. It's consolidating. It is no longer still dropping at the rate that we were seeing it before, meaning that it is starting to dry up. That means that if we're looking at these shares on loan, there's less shares right now that are willing to actually get loaned out. And we know that the shorts are going to be continuously adding to their position. And the kicker here is that if these shares have already gone out on loan and been shorted into the market, then that would mean that those shares have already been used against us. So what is the next step moving on from there? Well, I've shown you guys the BNY Mellon FAQ section about how forced share recalls work. And I do have kind of a bold statement here that even if we don't see forced share recalls and these institutions potentially get bored of owning AMC for whatever reason, I don't know why they would, but them selling could actually have a very bullish effect on the share price. Now, follow along with this thought process. Say that they actually have loaned out some of their shares. Well, those shares are technically no longer in their possession right now, and if they want to sell, they need to get those shares back. So what needs to happen then? Well, it's just like another forced share recall. They need to get their shares back, force those other shorts to cover their position, return the shares, so then they can get out of their position. But by then, the share price has already spiked up. So what we're looking at here is that even though the utilization is still a little bit lower, the shares on loan is consolidating. With the data that we're looking at here, we are in a very bullish spot going forward. Now, let's get into the situation surrounding Senator Toomey. So shout out to Unusual Whales for always putting out some very solid info. Toomey places a bill protecting payment for order flow. Reminder, he received about $1.2 million from large securities and investment groups, retirement funds, and banks during the 2018 election cycle. Now, something you got to keep in mind is that all of these politicians do this. They're all taking money from these institutions because they need money to run their campaigns. So it's not necessarily the most important thing to be looking at in terms of how much money they were paid, because essentially they all do it. But taking a look at this article on CNBC right here, Toomey's bill would prevent the SEC from banning payment for order flow, a controversial practice and key revenue source for online brokerage Robinhood markets. SEC Chairman Gary Gensler has said he's considering such a ban as part of his broader efforts to reform the practice in the U.S. Toomey defended the practice for helping develop new investment apps, low-cost trading, and more efficient execution. Critics say payment for order flow poses a conflict of interest for brokers, that there is concerning concentration of market share in the industry. Now, there's a duopoly of those market makers. We all know this. And is this bill going to get passed? Who knows? Nobody really knows at the current time. It just got brought. But what we can do as apes and in this community is we have a lot of power. When we come over here, this is kind of what I want to bring up. Senator Toomey was reelected to the Senate in 2016, defeating Democratic nominee Katie McGinty. On October 5th, 2020, Toomey announced that he would not run for re-election to a third term in 2022 or for governor. So essentially, we can't really use our voting power to make this payment for order flow ban a voting issue on Senator Toomey's ticket. But if there are other representatives that come out in support of this bill, we can make our voices heard and make sure that these representatives know that this is going to be a major voting issue come election time. That is really what we need to do at the current time in terms of reforming the market. AMC is going to do what it's going to do in terms of its share price going over the next couple of weeks and months. We have a lot of bullish catalysts coming up, and we know that the stock can run at any given time. But the other side of this trade and investment is that we want the markets to be more free and fair, and we have the power to do so as long as we can organize in an efficient way to present our ideas to these representatives and make sure that they know how important these different market structure ideas and how the market structure is set up at the current time, just how important that is to us in terms of what we are going to do come election day. Now, that's not manipulation or collusion in any form. That is just basic politics. So that is mainly going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.